Hello friends, this is Hatim Rampurawala, and in this video we would be revising IND AS16. That is, we would be doing the illustrations. We would not be solving all illustrations, but yeah, we would be doing some or a few of them just for practice purpose. Okay, so let's begin. We will first cover in the illustration number second. Okay, so Pluto Limited owns the land and building which are carried in its balance sheet at an aggregate carrying amount of 10 million. The fair value of so it has the land and building at 10 million rupees. The fair value is of that asset is 15 million. It exchanges the land and building for buying the private jet which has the fair value of so it is fair value of which see the fair value of land and building is 15 million. It is exchanging the land and building for the private jet which has the fair value of 20 million and pays 3 million and pays 3 million in cash. Basically this is not 20 million, it is 18 million. It is wrongly printed. It is an error, so it should be 18. It is 18 million over here basically. So the fair value of jet is 18 million and pays an additional cash of 3 million in cash. Show the necessary treatment as per India 16. So basically we had an asset, land and building cost is 10 million whose fair value is 15, and we are giving that 15 million asset, 15 million asset, that is land and building, and along with that we are giving cash of 3 million and we are receiving 18 million of jet. So first of all there is a gain of revaluation from 10 to 15 million. 5 million gain is there, and we would be recognizing the jet at fair value of the asset acquired. Okay, so provided that on solution, provided that the transaction has commercial substance, and commercial substance entity transaction has commercial substance, entity should recognize the private jet at cost of 18 million. So you would have got that this is not 20 million in question, it is 18 million at recognized at 18 million, that is fair value, and should recognize the profit and gain on the disposal of the land and building of 5 million as calculated below. So recognition of fair value, so 18 million jet less carrying value of land and building less cash paid. So this is the profit on profit and gain on exchange of an assets, and they had also said pass the journal entries. So entry will be property, plant and equipment, private jet 18 million, to property, plant and equipment, land and building 10 million, to cash 3 million, and to profit on exchange of an asset is 5 million. So with this we are done with illustration 2. Then we would be doing illustration 4. Okay, revaluation model for the entire class. Venus Limited is a large manufacturing group. It owns a considerable number of the industrial buildings such as factories and warehouse and office building in several capital cities. The industrial building are located in the industrial zone, whereas the office building are located in the industrial building are located in industrial zone and office building are located in the central business district of the city. Venus Limited management want to apply India 16 revaluation model to the subsequent measurement of the office building, but continues to apply the historical model. So what the company wants to do is apply the revaluation model to the subsequent measurement of the office building. So you want to apply a revaluation model for the office building and continue to apply the historical cost model to industrial building. So for office building revaluation, industrial building cost model, is it acceptable under India 16 property equipment? Yes, it is acceptable because these two are separate class of asset. There are separate use of this asset. One is used for the office admin purpose, and the second is industrial building. So since there it is two different class of an asset, different method can be applied. But if a method is changed for a particular asset, it has to be changed for entire class of an asset. But these since these two are different class of an asset, it is okay. We'll go through the answer. Venus Limited management can apply the revaluation model only to the can apply revaluation model only to office building. Can apply the revaluation model only to the office building. The office building can clearly distinguish from the industrial building in terms of function, their nature, and their general location. So this office building is clearly distinguished from the industrial building. IND S16 permits the asset to be revalued on class by class basis. The different characteristics of the building see, these two building has different characteristics. Index 16 says it has to be reevaluated on class by class basis. Different characteristics of the building enable them to be classified at classified as different PPE classes. The different measurement models can therefore be applied to these classes of subsequent measurement. Different measurement models, see what they are given is different measurement model can be applied for different class of an asset. For different class, different measurement can be applied. All the properties within the class of the office building must, so all the properties within the class of the office building must therefore be carried at revalued amount. Separate disclosure of the two class must be given. So the separate so the office building should be carried at revalued amount, and office and the separate disclosure of this must be given in accordance with para 73 of Ind AS 16. So what we had studied is Venus Limited can apply for revaluation for office building. It has to only apply only for the office building because it is in distinct, clearly distinct from the industrial building in terms of their function, nature and their general location. Then Ind AS 16 permits the asset to be revalued by class on class by class basis. The different characteristics of the building enable them to be classified as a different PPE. The different measurement model can therefore be applied to these classes of subsequent measurement. All the properties within the class of the building must therefore be carried at revalued amount. The separate disclosure 16 say it can be done by class basis, and different characteristics to be applied to different PPE, and hence all the property within the same class of building must therefore be carried at revalued amount. Building must be carried at revalued amount, office building, and separate disclosure of these two class must be given in accordance with para 73. I just repeated this twice or thrice, just that it should be markup. Then wait a second, which sum we would be doing. Yeah, we would be doing illustration 6, revision of the useful life. An asset which cost 10,000 rupees was estimated to have a useful life of 10 years and a residual value of 2,000 rupees every year. Useful life was revised to 4 remaining years. Useful life is revised to 4 remaining years. So what they have given is, just calculate on your calc, that is the asset was worth cost 10,000 rupees, has useful life of 10 years, residual value is 2,000. So 10,000 minus 2,000 residual value after 2 years. So 2 years debit has been charged. So what after 2 years what will be the WDV? So 8,000 divided by 10 into 8. Wait a second, I did wrong. 8,000 divided by 10 into 2. 1,600 will be depreciation minus 10,000. So the WDV is 8,400. Now the revised useful life is 4 years. After 2 years the useful life is revised to 4 remaining years. So 8,400 divided by, wait a second, 8,400 minus 2,000 residual value divided by 4. So we will get the depreciation for the next period as, calculate the depreciation charge is 16,000. So first 2 years 8,800, and for from third year it will be 1,600, that is 1,600. See, depreciation charge is 800 and 1,600. Now we would be doing illustration number wait a second, which illustration we should do is illustration 10. 7, 8, 9, 10. Yeah, the term of the operating lease allows a tenant XYZ to tailor the property to meet its specific need by building an additional internal wall, but on the condition that the tenant return the property at the end of the lease in its original state. This will entail the dismantling the internal wall. XYZ incurs the cost of 25 lakh rupees on the building, the wall, and the present value of estimated cost to dismantle the wall is the wall entails dismantling cost will be, cost is 25 lakh rupees on building the wall, and present value of estimated cost of dismantling of wall is 25, so of present value is 10 lakh rupees. So both will be added basically. So the cost of building is 25 and the present value of estimated cost to dismantle the wall is 10 lakh. at what value should a leased hold improvement be capitalized in the books of XYZ? At what value should be capitalized? That is at 35 lakh. The leasehold improvement is not only the cost of building. The leasehold improvement is not only the cost of building, but also the cost of restoring the property at the end of the lease. As such, both the cost, that is 35 million, are capitalized when the internal wall is built. Internal wall is built. Uh, will be recognized in the profit and loss account over the period of the useful life of the asset, generally the lease term. So this cost of 35 lakh rupees will be depreciated uh, on the basis of the useful life, SLM basis, on the base over the useful life of the asset, and that is generally the basically the lease term. For instance, if the lease term is 5 year and 35 lakh is the cost, so simply divide 35 lakh by 5 lakh, and that cost will be charged to the profit and loss each profit and loss account every year as a part of the depreciation charge. Okay, so we are done with that, and then we would be doing illustration 12. Yeah. XY Z Limited purchased an asset on 1st January for 1 lakh rupees, and the asset had an estimated useful life of 10 years and the residual value of nil. Just take the calci in your hands. We will be doing quickly on calculator the figures. That is 1 lakh rupees was the cost, had purchased, and has an estimated useful life of 10 years and residual value nil. So how much will be the depreciation? Simply divide by 10. 10,000 will be depreciation of each year. The company has charged the depreciation using the straight line method, 10,000 per annum on first 1 Jan 4, that is after 0 1 2 3, after 4 years. So after 40,000 rupees depreciation, the cost will be 6 60,000. The management of XYZ Limited reviewed the estimated life and decided that the asset will probably useful for a further 4 years, and therefore, so see, what they were given is after 4 years they have said that it will be available for a further 4 years. So the remaining was 6 years, but now it is only 4 years. So 60,000 divided by 4, so 15,000 will be the depreciation every year. Should the asset be accounted How should the asset be accounted for the remaining year? Simple, that is in the 7th year the closing value will be 60,000 minus 15,000, that is 45,000. The change in the economic life of an asset is change in an accounting estimate which is to be applied prospectively. Change in an economic life of an asset, economic life from 6 to 4 years, is a change in an accounting estimate which is to be applied prospectively. That is, the depreciation charge will be recalculated on 1st Jan 14, when the asset net block value is 60,000. The company should amend the annual provision for depreciation to charge to charge the unamortized cost, namely 60,000, over the revised remaining useful life of 4 years. Consequently, it should charge the depreciation for the next 4 years at 15,000 rupees per annum. Okay, so we are done with this. Wait a second. With this illustration thing, what we'll do is we'll solve one, test your knowledge as well. We would be solving question number 4. X Limited has a machinery which has got damaged due to fire on 31st March. The carrying value of the machinery was 1 lakh rupees. X Limited sold the damaged asset as a scrap for 10,000. So the machine cost was 1 lakh WDV. It has sold for scrap for 10,000. So 90,000 was an impairment. So 90,000 was loss, that will charge to profit and loss account. X Limited had insured the same asset against the damaged as on 31st March 2001. That is, after 3 months, the compensation proceed was still in process, but the insurance company has confirmed the claim. So if they are confirmed, so we can recognize the asset. The compensation of 50,000 is receivable from the insurance company. Should X Limited account for the above transaction? Yes. 90,000 will be the depreciation, 90,000 will be the amortization, will be the what we can say, impairment loss, transaction loss, that is, as it has been disposed and we have received only 10,000 rupees, and this 50,000 will be accounted as receivables in the balance sheet. We'll quickly go through the solution. See, As per para 66, impairment loss of an item of the property, plant and equipment and related claims for the payment of the compensation from the third party are separate economic event. See, this related claims from the compensation and the impairment loss of the property are two separate economic event and should be accounted separately, so that loss of 90,000 will be accounted separately, and this 50,000 rupees of asset, 50,000 of the asset, that is income receivable, would be accounted separately. X Limited should account for the above transaction as given below. At the time of the sale of the machinery, X Limited should write off the carrying amount of an asset in the books and provide a loss of 90,000, that is carrying amount minus 1 lakh minus realized amount of 10,000. And as on 31st March 1, that is closing, X Limited should recognize an income of 50,000 against the compensation receivable in the profit and loss account. So two effect will be given, that is one is income receivable in the balance sheet, and the we will recognize 50,000 as our income as well on accrual basis. So we are done with this illustration 4 as well. So we would be stopping our video over here. Thank you for watching the video.